Hello. This is a quick one, actually. All right, I just want to use the time to tell us about market structure. Market structure is just the pattern of the market, how the market moves. So just like every other, mm, let's say building, everything has structure. Being building, even shares have structure. Even human being, our body is structured in such a way. So the foreign market also has its own structure. So it has rules and patterns that it must follow. And it's possible for those patterns to be broken. And if that happens, is the name wants to call it. All right. Now, market structure begins from support and resistance, which is the basis, which I believe you all know. Yes, begins from support and resistance. Support and resistance. So we assume this is our support. We assume this is our support, and this is our resistance. So we all know when price move from support, when it get to resistance, it tends to come down. So this support and resistance you are seeing is they are the tools that made up the structure of the forex market. Now, if this market see it moves to resistance, came down to support, we actually expect to move upward. But instead of to get back to where resistance is, it went down. Now, such a market, we can say that the market actually breaks the area of support. So there's a name they call it. So right now, I'm going to show you how the market moves, the structuring of the forex market. The same thing happens in the market on a daily basis. Just the same way our work logs on from 12 a.m. to 12 noon and back to 12 a.m. 24 hours. So that's same way that's how the market also moves. So let's assume this is a trend. I believe you all know that this is an uptrend market. And in drawing your trend line, you ensure that the trend line touch minimum of 2 week. If it is an uptrend, a little minimum of 2 low in the market. So the trend line should at least 2 low in the market, or 2 week in the market. So let's assume that this is also a 1 hour time frame, and this is an uptrend movement. Now, one thing you observe is that when the market moves up, it came down, and moves up again, came down, moves up again, came down, moves up again, came down, moves up again. But even when it's coming down, we already know that it is actually an uptrend. This down movement you see is what we call retracement. It is called retracement move. In this uptrend, the part of the market that moves downward like this, we call it retracement. So the market is retracing. Now, the part of the market that later moves forward or upward after retracing, that part is regarded as impulse move. So the up movement after retracing, which is the actual movement of the market, is known as impulse move. So I have retracement also have the impulse move, which is the actual movement of the market. So this impulse, this retracement is like force movement. So some persons at this point, that's okay, let me sell. And at the end, the market come down, hit your stop loss. Now, don't forget the first illustration I gave of the support and the resistance, which is actually the basis of market structure. Good. Now, let me zoom in. Okay. Now, this is actually an uptrend, which we already agreed that is an uptrend. So, this part you are saying, let's say this is where the trend begins from. This is where the market starts from, or the opening of the market. So, it has an impulse movement, then retrace, then impulse movement and retrace. But you can still are progressing upward. All right. So, don't forget, I said the basis is support and resistance. Now, at this point, we assume here to be support because at this point, the market went upward. So, we assume here to be resistance. Because when the market get to this point, it came down to this like a support area. This is our resistance area, right? So when the market came down, it break this resistance area. Don't forget I said support and resistance is the basis of market structure. So this is the resistance, this is support. So when the market get to resistance, it came down. Let me make it a little bit easier for us. Resistance and support. So when the market moved from support again, it went to resistance and it came down and it break this resistance. Now what happened is that the market breaks structure. It breaks this structure. All right. So the market breaks this structure. And this breaking market structure is also known as BOS. So I'm going to use the letter B to indicate breaking market structure. All right. So I'm going to use B to indicate breaking market structure. So B indicates that the market structure was broken. Okay. Now what we have here is support to resistance came down, which is retrace, and we break resistance. So this is what we call BOS, of breaking market structure. Now I actually made a note here. I said BOS is breaking market structure. Later I will show you what MSS mean or CHOCH. It means shifting market structure. But let's talk about breaking market structure first. Breakup structure. Good. Now we are done with this support and resistance. We are done with this support and resistance. We are done with this support and resistance. All right. So now let's move to the next. This is also another resistance because when price get to this peak, it started coming down. Don't get this 1 hour time frame. So if you look at this in 1 minute or 5 minutes, discover that this range movement is very long. So that's why you must learn to view your market from from a higher time frame. So now this is another resistance. Here now became support. Now you must have heard the term support became resistance or resistance becoming support. So this resistance, if we extend it, it has become support this way. All right. So if we extend our resistance, at this point it became support. So when the mark this impulse movement, here resistance. There was resistance in the market at this point. The market moves here, it came down. So on a norm, we are expecting the market. We are expecting the market. We actually expect the market to actually get to this resistance and come down. But it refuses to move down. But it breaks it. Now this break again is known as what? Break in market structure. Because at this point, resistance has been tampered with. So it's not a strong resistance. So the same thing happened here. All right. Let me just bring it. Let me bring it here. So the same thing happened. The same thing happened here. All right. It breaks. Move down. It breaks. So because of time, that's an uptrend. So this movement you see. Okay. Then the other thing I want to show you, apart from the market breaking market structure BOS, is there are primary terms we normally using when we talk about market structure. I will talk about higher high, higher low, lower high, lower low. Now, for this uptrend, with everything we are using is going to be high, either higher high or higher low. Now, let's start with, okay, let's just start with high, all right? Although this is actually a low, this point is actually a low, it's actually a low, all right? So this particular point where we have here is, let's say higher high. Okay, this is higher low, forgive me, this is higher low, this is higher low, yes. So this higher low is higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, and higher high. Now, why is this particular area called higher low? Okay, that's what I want to show you now. Higher low, which is HL. 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 The reason why this part is called higher low, higher low, is because if this is if this is your candlestick chart, it is your candlestick. Now, this part is known as what? The low. This is the low. This is the open for a green candle. This is the close. This is the high. I repeat. This part, this week is the low. This week is the low. This part is the opening of the market or the candle. This part is the close of the candle. And this up week is known as the what? The close. The high, I mean to say. So I have the low, open, close, and high. So this point, this is still the low. This is still low. This is high. This is low. This is high. The difference between the bullish candle and the bearish candle is that the bullish candle opened at the bottom and closes at the top. You get it? When the bearish, don't worry, bearish is coming down. So the bearish open at the top and close at the bottom. So the bearish is coming down, open, close, open, close, open, close. But yeah, it opens, okay? It opens, close, opens, close. All right. So that this is a low, this is the high. Now let's go back to our market. Now that is the reason why this part is going as a higher low and this higher low. So this low is higher than this low. They are all low, you understand? But this particular low is higher than this previous low. The same thing with this low. So the particular low is higher than this low. So we have higher low, higher low, higher low, right? Now, what about higher high? Higher high. Okay, for higher high, we use H to depict higher high. All right, we use H to depict higher high. We use H to depict higher high. Double H, H, H. So why is it called higher high? Now, it's called higher high because this is the eye of the market, and this eye is higher than this. This eye is higher than the previous eye, and this eye is higher than the previous eye. So that's why it's called higher high, because the market is moving upward and it's creating new highs, new low, new highs, and all of that. So and the highs that are being created are not in the same frequency. So that's why we see one eye is higher than the other eye. So that's why I call it higher high, higher high, higher high, and all of that. So if you go to the market, let's say this is a low, right? Higher high, higher low, 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 higher high. All right. So that is for an upward market. So the inverse is for a downward market, bearish market. But I'm going to show you just a sample, then we move on. So let me just use this place to do that for us. Okay. So this is the downtrend. All right. In this market, all these are high. Hope you know. These are low. So at this point, we say uh, this is a low because the low is always under. This is under low. So lower low, lower low, lower low. Now this is called lower low because this low is lower than this particular low. This low is downward, lower than this particular low in terms of low. All right. So this low is lower than this low. This is now market. This low is lower than this particular low. Then the other term here we have is lower high. Here we have lower high. Why is this called lower high? One, it's because it's a downtrend market, so everything begins with low. So this low, this particular low is higher than this low. Look at this low. Look at this low. So this low is lower. This I mean to say is lower than this low. So the high is coming down, is reducing, so it's becoming lower. So that's why we call it lower high. It's a high, but it's lower than the previous high. All right. So when you have understanding of this particular basis I'm sharing with you right now, you'll be able to break the structure to an elementary level and make proper decision in the market. So lower low, lower high, 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 lower low. All right. So that is that. And the last thing I'm going to talk about is the break in okay, we'll talk about break of market structure, which is the B here indicated. The last thing I want to talk about, okay, I didn't put B here, but you understand this is it. Because it's a low market. We're expecting price to get to this point and move upward, but it did not. So we're expecting the price that once it gets here is support and resistance. So we expect the price that it gets here, once it gets, it's supposed to move upward, but it did not move downward. So it breaks this support level. So it's a break in market structure. So the support structure has been broken, whereas it maintains the resistance. All right, so that is that. So the other thing we want to talk about is the shift in market structure, which we also know as MSS. Okay, I'm going to open a new slide for that. I can go beyond there. Okay, let's do it here. Okay, we say shift in market structure. Okay, we say shift in market structure. Okay, the same thing, just focus. Now, this is an upward movement. Please focus. At this point, you already understand higher high, higher low, higher high, higher low. All right? Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So we already understand that at this point, let me change the color. We already understand that at this particular point, okay, we understand at this particular point, we already understand that at this particular point, we because it's an open market, we expect the market to break this resistance to continue the upward trend because this is an impulse move. It's actually retracement. So this is a remove, so it must break this resistance. All right. Now say when it breaks the resistance, become break a market structure. So we already know the market is obeying structure because we're actually in an upward movement, so it keep on going. But in a case where the market, instead of coming here and going up, it now moves downward. Now we also call this change in market trend, all right? But these also known by professional traders to be a shift in market structure because the market is not supposed to go below this higher low. It's not supposed to go below this higher low, just as this particular retracement did not go beyond this low. This retracement did not go beyond this low. Same thing, this retracement did not go beyond this low. So once you're expecting this one to be a retracement that will not go below this low. So when this one moves downward below this low, we call it change in market structure. Market structure shift or shift in market structure. So the structure of the market has been hampered, it has been altered. So there's a shift in the market structure. So if you've been on a bullish market, you bought, so this is the best time for you to take profit, especially if you have not hit your take profit margin target, right? But in a risk scenario, this is what will happen. Once, okay, we're going to talk about that later on. Okay, because of time, we spent a lot of time already. So this particular event that occur here is known as well shift in market structure. Yeah, you can call it MSS or CH or CH. So the market will just a little bit, then you know we're already in for a downtrend. And this downtrend, don't forget, is our low, lower high, lower low, lower high, lower low, lower high, lower low, etc. So if you have a question, my DM. And please always do my assignment. Thank you for the time. God bless you.